Before we continue to the video, we are very happy to share our first app, the Options Bull Trading. In this app, you can learn about stock market from very basic, and you can even learn very advanced concepts. You can paper trade, you can see what's the market situation, and live AI assistant, learning courses, strategy builder, etc. All of these for free. Yes, you heard me right, for free. So don't forget to check out the app. The link is in the description and in the pinned comments. Traders, if the abyssal dives we just covered have you spotting those deep swells and void traps where big players hide their moves on Nifty and Bank Nifty, then let's keep it real and simple next. No more deep themes, just straight price action setups that cut through the daily noise. The basic stuff like big engulfing candles or random breakouts, they're everywhere and get faked out too often. To trade clean in 2025 with all the FII, buying and market swings, you need simple price action ideas that focus on clear patterns in candles and levels. These are the ones most traders skip because they seem too basic, but they work steady when you follow the rules. I'm Trading Core, and in this 20-minute session, we're covering 5 straightforward price action setups made for the Indian market: the clean pullback entry, the confirmed break play, the wick rejection setup, the tight range fade, and the gap fill trade. Nothing from before. No swells, voids, or chains. These are all about clear candle looks and level tests, showing how big money sets up without extra tools. We'll go over what each is, why it works, the trader mind behind it, how to find it on charts, how to enter and exit, risks for NSE moves, common mistakes, and ways to combine them, all from price only. Use 5-minute, 15-minute, or daily charts on Zerodha Kite. Let's get into it. First, think about why these simple setups win on Nifty and Bank Nifty. Price moves in clear ways, pullbacks and trends, breaks from ranges, rejections at levels, but most traders jump in too soon or chase noise. These setups wait for the clear signal, so you get in when the move has support. Trade them with 0.5% risk per go, best at 9:30 a.m. open or 2:30 p.m. when volume picks up. Stay patient. Force a trade and you'll lose the edge. Starting with the clean pullback entry. The clean pullback entry is a simple dip in a trend that pulls back to a clear level and bounces right away. It's 1 or 2 candles that go against the trend, but close near the start of the pullback, with a small tail showing buyers or sellers stepping in. Why it works: big players use pullbacks to add to their side cheap, shaking out small traders who think the trend is over. Small traders sell the dip in an uptrend. Big money buys it, so the bounce comes quick. Find it on a 5-minute Nifty chart. In a clear uptrend, higher lows and highs. Look for the pullback after a 100-point run. The candle body matches half the last up move, closes above the pullback low, and has a tail up. Enter long above the pullback high on the next close. Stop 10 points below the pullback low, 0.5% risk. Target the last up move size or 2, 1 reward. Exit half at 1 if it stalls. Mistake to avoid: taking deep pullbacks over 60% of the move. Stick to shallow ones, or it's a real turn. For Bank Nifty, cut risk to 0.3% on bigger swings. Add a confirmed break nearby for better odds. It hits 65% of the time for 150-point runs. This setup works great after the open, turning small dips into trend adds. Next, the confirmed break play. This is a range break that waits for 1 full candle close outside the range before you jump in. The range is 4-6 candles in a tight box, say 80 points, and the break candle closes fully beyond the edge, with a body bigger than the range average. Why it works? Traders inside the range buy low and sell high, but big players wait to break and grab all the stops outside. Small traders chase the first poke. Big money confirms with a close to run it. Spot it on a 15-minute Bank Nifty chart after flat action. Draw the high and low lines of the box. The break needs a close outside by the body size. No big tail back in. Enter in the break direction on that close long above for up break. Stop inside the range at the other edge, 15 points. Target the box height added to the break 1:2 ratio. Trail if it keeps going. Avoid the fake. If the close is just a tail poke, skip it. Wait for body confirm. Risk 0.4% on Nifty for quick fakes. Take half off at 1-1. Pair it with a wick rejection at the edge for 62% wins and 200-point breaks. Use this in midday ranges to catch the afternoon push. Now, the wick rejection setup. Here, a candle wick hits a key level hard but closes away from it, showing rejection. It's a long tail twice the body at a round number or prior high-low, with the close in the trend side. Why it works? Stops cluster at levels, so big players push the wick to hit them, then reverse to take the other side. Small traders see the wick as a break and pile in wrong. Big money uses it to flip. On a 1-hour Nifty chart, mark key levels like 24,000 or last day's close. The wick must stretch past by 20 points, close opposite with small body. Enter on the rejection, close in the reverse direction, short below for down rejection. Stop beyond the wick, end 20 points. Target twice the wick length or next level 2. 1. Don't trade short wicks. Need the long tail for real rejection. 4. NSE, 0.5% risk, but trail to break even fast on volatile days. Combine with a tight range for 60% hits and 250-point moves. This shines at session ends, rejecting fakeouts for clean turns. The tight range fade comes next. In a small range under 50 points over 5 candles, you fade the push to the edge when bodies get tiny. The last 2 candles have bodies under 10 points, testing the high or low but closing middle. Why it works? In tight spots, big players build positions inside, fading the edges to trap breakout chasers. Small traders bet on a break. Big money keeps it tight until they load up. Traded on daily bank. Nifty zoom to 15-minute. Spot the tight box with equal highs-lows. Fade entry. Short at the high test close if down bias, or long at low. Stop outside the range 15 points. Target the range middle or opposite. Side 1, 2. Skip wide ranges, tight only, or no trap. Risk 0.3% for Bank Nifty's traps. Exit if it breaks clean. Add a pullback entry inside for 58%. Fades into 150-point drops. Good for post-news ranges that go nowhere. Last, the gap fill trade. Price gaps open away from close, say 100 points up, but you trade the fill back if the first candle tails into the gap. The open candle has a wick back 50% into the gap, closing weak. Why it works? Gaps pull back to fill fair value, especially on news. Big players fade the open gap to get better prices. Small traders chase the gap direction. Big money waits for the tail to fill. On 5-minute Nifty at open, note the gap size. Enter, fade on the tail, close toward the gap. Short if up gap. Stop beyond the open extreme 20 points. Target full gap fill or 1, 3. Avoid no tail gaps. Need the wick for fill signal. 0.4% risk. Partial at half fill. Layer with wick rejection for 61% fills and 100-point plays. Perfect for gap opens that reverse quick. Your daily plan at 9:00 a.m. Check daily for levels and ranges. Watch -5-minute for setups in busy hours. 1 trade per setup. Note what worked. These add up to plus 25R a month if you stick to rules. Which one clicks most? Pullback or gap fill? Comment below. Free PDF with chart tips and description. Like and subscribe. Next up, simple combos. Trade simple. See you in the trades.